Good morning all and welcome to this morning's video. So this morning I have 4 pairs on watch, and those are pound CAD, Aussie Kiwi, dollar Swiss and pound Aussie. So I've just taken sugar USD off of watch, not because I'm not still interested in the entry that I've been forecasting for a little while now. It's just that these 4 pairs look like they're a little bit closer to providing an entry than sugar. And since I don't have more than 4 pairs on watch at any one time, I've just moved sugar off of watch, but I still have an alert set on that pair just in case it shapes up or gets to the area of value, in case price gets to the area of value a little bit more quickly than I was anticipating, I should say. Easy for me to say. Right. The 4 pairs I have on watch, pound CAD is my favorite of the bunch. So on the higher time frames, we can see that we have this low here. We have a series of near misses. Okay, price comes down, it gets quite close to that, and it near misses it each time. Eventually, usually these near misses take out the low that they've near missed to, and the same is true on the flip side. They break below on the higher time frames, especially when they're as standout as this one, this all-time low. It breaks below. People think it's just going to keep going. It's going to the moon, or whatever the opposite of the moon is, the floor. Hell, who knows? But the majority of the time, all this represents is a discounted price, a bargain area of value for the bigger players to step in and buy this up. And then sure enough, it rallies to the upside. We then get this kind of non-progressive price action where price looks like it's running out of steam. And I was anticipating at the time, feel free to watch my previous videos, I said it's not about being right. I was anticipating a potential move from this area because we had this volume built here, okay, and there was an enormous sell-off from that area, one that broke through all of these lows. So when we got to this area in a non-progressive way, if we just look at that price action, this exhaustive price action, especially when we had this kind of potential reversal structure there, I was looking for shorts from that area there, okay, but this is where we take a message from the market. So let's just zoom into that area and see what actually happened. Now, that could still happen. Okay, you can see that we have these wicks at the top. That's kind of selling pressure. And this could end up, if it was to break below, this could end up being what we call a weekly retrace. So if this was to close down here at sort of this region and retrace 50% of the length of this candle, and close like that, that would be a weekly retrace, and it's very likely then that the floodgates would open for a move to the downside. But what I'm seeing at the minute, if we just analyze the price action, okay, price broke above that area that I was just talking about, but what's it done? It's consolidated above it for 1, 2, 3, 4, 5 for 5 days. Okay, now what I'm seeing at the minute is a potential. So we have this base. So price comes down, it breaks above that area, and then it leaves a footprint, and then there's a series of near misses to it. This is not typical, okay? If we're going to move to the downside, it's not typical that we get an impulse and then a correction which is wider than the impulse itself, and especially since we've kind of near missed that high as well, that's not typical for a move to the downside. And however, there is, just to touch on it, so what price might be doing at this moment in time and what are we looking for is, so we have that base there. I'm looking for price to tap into that and then push back up and flag, okay? But I'm specifically looking for a break below this, not just to tap into it as we've had now, okay? And the reason being is if we just measure this middle section, okay? So the middle section I'm talking about from there to there, if this is a middle section within this structure here, okay, we don't normally see, I was talking about this yesterday, this much volume, okay, and if we just measure the depth of this middle section, usually we would break out by a similar length if we're going to move to the upside, which would actually take us down to there and down to that little sharp hook point there, okay? So to take a flag here, for example, let's try that again. To take a flag here, for example, you'd be more likely to be tagged out. Price fulfills that move, and then moves to the upside from there, okay, if it is going to move to the upside, okay. So what I'll specifically be looking for, it's a little niche detail, but could save you a lot of losses simply because of the volume that's been built up within that middle section. If it is a middle section, what I'll be looking for is a break below, specifically a break below. I've got all sorts going on here. Right, there we go. A break below the area of value, a 1 hour impulse back up, followed by a 2-touch 5-minute continuation, and then I would look to get long with either a reduced risk entry on the break or a risk entry within it. And if we got the 2-touch 15-minute continuation, even better. That's a little bit more confirmation. But I wouldn't be surprised if we do just drop out, if price just drops out because of that weekly, because of how we got to that sharp area, because we have a kind of reversal structure there, and potentially because we have those wicks there, and this could open the floodgates for a move to the downside. But if that was to happen, because of all of this price action, I would want to see something more developed. So it's not that I wouldn't be interested in the shorts, but I would want to see something more developed like that, okay, which kind of retests the back end of that, and we'd be trading through that likely at that point, and then I would look to get short with a risk entry, but that wouldn't be ready till Monday, okay. So just being neutral on this pair, but what I'm looking for today is that entry which I just showed you a moment ago, so I'm going to leave that on the charts. There's no alerts there. I've actually got a Google Calendar reminder to remind me to check this at about 9 a.m. and just to see how the land lies, okay, and if the entry is close to shaping up. So that is pound CAD. Aussie Kiwi, this looks a little bit closer to being ready. So what I'm looking for here is, so if we just zoom out, okay, we tapped into that high there, push to the downside, and then potentially this is an impulse correction continuation to push lower to take out all of these near misses, okay, which near miss to this low here. We do have the near misses up there, okay. This is partly why this is second on the list, but I'm not so worried about that at the moment because we've broken above all of this, okay. You can see the little trap there, catching the sellers into the trade too early. It washes them out and then moves to the downside. If we just zoom out ever so quickly, I'm already on the weekly chart, but if we zoom out to the monthly, look how bearish this monthly candle is. And this, just touching on it, if this closes anywhere like this by the end of the day, then this would have been a complete monthly retrace of the previous monthly candle, which would likely open the floodgates up for a move down to either the slightly lower time frame target, which you'll see in a minute, or down to these lows here, okay. So this candle, if it closes anywhere like that by the end of the day, given that it's the last day of the month, that could well and truly open the floodgates. You can see that we're trading back below all of these highs now, and it looks quite clear to me that we're either coming down all the way down to these lows or just coming down to this minor inflection point here, which is there's a bit of consolidation here which retested the back end of this running channel, which is a bit more clear on the lower time frames as we drill down. One of the reasons I'm kind of targeting there, as you can see from my arrow, is because for price to travel a lot further, it would probably need to build a lot more volume, okay. So this is just kind of a shorter term move. It would probably need to build more volume to take it all the way down to these lows. Do excuse me if you can hear all those birds outside. But what we have on the lower time frames, so I'm not too bothered about this near miss at the minute. What we have here is we have this high, we have the Falcon Mechanics 101, we have this high, we have this second touch that breaks above this kind of first touch there, and then near misses. What do we do when we near miss? We usually come back up to take out the near miss and the high that we near miss to. We tap into that and then we push down. I'm just looking at this. This is Aussie Kiwi, so you do have to remember that this is one of the messiest pairs when it comes to the lower time frames that you'll trade. The higher time frames are very, very clean, but the lower time frames are very messy. So you have this 4-hour candle with a big wick below it. So I wouldn't be surprised if we consolidate sideways for a period of time. Okay, you can see that we have flagged now. We've got the impulse down followed by the correction, but once again, we've got this big wick below it. And if we just analyze this structure, So we have the correction forming there, but I've said previously, if this is the structure here, okay, and that's the high of the structure, and that is the near miss to it, if this is the middle section there, we don't usually see a corrective move into it, an impulsive middle section, and a corrective move out. When that happens, what usually occurs is that we have a 1, 2, 3 structural approach. So if we just analyze this on the 5-minute chart, okay, so when the middle section is impulsive and the move into it and the move out of it is corrective, what we typically see is a little structural approach, something like that, leading up to it, where we'd have that leading up to the high there. Okay, so I've got an alert set. I'm just I don't know why my alert has gone down there, because I didn't put it there before this video started. It was higher up, so let's move that back where it was. So I've got the alert there just below that high. Okay, I'm just going to pop a ray line on there just to make sure it's, yep, it's just above it. So I'm going to monitor this one. I've got that alert set there, but because of that 4-hour wick and the 1-hour wick, I wouldn't be surprised if this consolidates sideways for a period of time, but that's absolutely fine, because the more we consolidate, the more volume we're building. The more volume we're building, the more likely the runoff to the downside will be aggressive. So then I would target so I'd be targeting that low, which retested the back end of this running channel there, just because price, I think, would need to build more volume to take it much further than that, based on what we're seeing at the minute. And that would give us, so just to touch on it as well, I'm looking specifically for, as a minimum, a 2-touch 15-minute continuation. It's looking like it would be a 3-touch, but that was my minimum requirements. I'm not looking for, this is another niche detail, I'm not looking for an entry on the break. Okay, specifically because it would be difficult to manage it down to these lows, especially as I've got to go to hospital with my partner today. So one of the things you have to factor in when it comes to trade management is if you're going to be around to actually manage the trade. So I won't be looking for an entry on the break. I'll specifically be looking for the entry within, the risk entry within, okay, so that I have more room to manage it to these lows. And especially since I have other commitments today. So that is Aussie Kiwi, and then my target would be that low that I was talking about, and that would give us about 6.9%, something like that. And I would mechanically manage this using the Fibonacci tool, and I would set a take profit at the 90% area whilst simultaneously trailing my stop loss. So that is Aussie Kiwi. We shall move on to the last couple of pairs. Okay, so we've got dollar Swiss. Yeah, dollar Swiss is doing exactly what I thought it would do at this moment in time, but we shall see. So dollar Swiss, we tap into a low. Okay, where are we? There we go. We tap into that low. Now, this is looking to me like an impulse correction continuation to push higher to take out this near miss, which near miss to that high there. However, you can see that we've had a drop off. Look at that daily candle, that full bodied close there. That to me looks like it price is likely to then take out that. So the base of this consolidation, the start of this consolidation started there, and we have a near miss to it. So to me, it looks likely that we'll take out that low, which this low near miss to at this moment in time. Then we might see the push up like that to take out that high, which this high near miss to. So I'm just speeding up a bit because I'm running out of time here. You can see if we just drill down, so we have the impulse there. We have a little footprint. If we can see there, we have a little running channel there. Then price leaves a footprint, and when I drew my forecast last night, I thought we'd gravitate towards this footprint, and that's exactly what's happened. Okay, because this is separate, this is below all of this. So what I'll be looking for, and this likely won't be ready by the end of the day, but I've got it on watch just to just in case. So I'm looking for a 3-touch here because of how far we are into the move, and because this sequence is not typical. Look how we moved down, we pushed up like about 80% of the way, and because of the near miss above as well, I'm looking for a 3-touch 1-hour continuation or a 2-touch 1-hour continuation with a 3-touch structural approach. That's what I just illustrated on Aussie Kiwi a moment ago, the 3-touch structural approach. And then I would look for a 5-minute risk entry within the flag and then I'll be able to manage it down to there for something in the region of 5%. That would actually be my target, just because we have the near miss up there, and we may pull back deeply from that area. Okay, and also that is not as significant. That's a very sharp move. So just a short term, and we've got alerts going off. A lot of fear going on at the minute. There's just alerts going off all over the place. But fear is how you lose money. So I'm not bothered about that. So that's what I'm going to be looking for from dollar Swiss. Okay, so just that entry there. So I've got an alert to see if we can push back down to give us, a second bottom, or create some bottoms there to give us that structure. So we've got pound Aussie. Pound Aussie is last on the list, partly because if we just analyze this, so we tapped into that low there. We have a near miss there. That's partly why it's lower down. It's tapped into something, but it's not really tapped into much of significance. It then generated all of this volume, which is slightly strange for the start of a move as well. But we do have a clear impulse correction continuation at this moment in time. We've corrected sideways for many, many days, suggesting that there's no need for price to come all the way back down here at the minute. So what price is likely doing is it's slightly giving us an impulse correction continuation to push higher, at looking like to take out that high, because we have this structure here, okay? And then this whole thing is a middle section, potentially. Okay, potentially. Let's get that off the chart. So what I'm looking for, so you can see price gravitating back towards the low of the structure. There's nothing else to worry about in the vicinity of this impulse up and this correction. Okay, so what I'm looking for, we have a top there. You can see the mechanics of the market again. Taps into one of these highs, doesn't get all the way to the high. Okay, I actually prefer that. Okay, because we have a bit of a scoop there. We didn't tap that high, so we kind of leave a near miss to there as well. So what I'm looking for from this pair is the following. I'm looking for price. In this instance, I'm looking for price tap into the area, a 1 hour impulse up, and then if we get the 2-touch 15-minute continuation, I'll look for a 5-minute risk entry within it, or a reduced risk entry on the break. I'm not looking for a 5-minute just because of the sequence, and because of the fact that we kind of reacted from nothing of overly significant value, okay, and how this consolidation. So because it's slightly atypical, I'm waiting for a little bit more deliberacy before I get in, and then I would manage this up to there. I've actually changed. In a previous video I was looking up there, but when I reassessed this, I thought to myself, well, this is a sharp move and we've still got 9.5% to work with. So that is probably where price would pull back deeply, and I don't really want to sit through a deep pullback even if we keep going. So I've just changed my target there slightly, but for logical reasons. So that is pound Aussie. What was happening on let's have a look. I always get into the habit of saving what I do, because sometimes TradingView loses it. Okay, so what's happened here? Okay, we've broken above there. Okay, so I'm just going to assess this. I'm just going to monitor this and see what happens. But that is what I'm going to be looking for today, folks. I hope you've enjoyed this video, and I will see you again in the next one. Thanks very much for watching. Have a great day. Have a great weekend, and I'll speak to you again soon.